pessimists sound smart, but optimists make money.
Welcome back to The Necessary Entrepreneur. Today's guest, if you saw the spelling of the name, you'd say, Mark, come on, get it right. But it's Robert Rolih. He's an international best-selling author and long-term investing expert. I can't wait till he tells us how to make all the billions. And now we're talking about trillions. Who's going to be the first trillionaire? So Robert grew up in a small village in Slovenia, where he is joining us today. He became a successful entrepreneur and then lost much of his wealth by trusting traditional financial advisors and so-called gurus. That experience sent him on a 7-year research mission into how the financial industry actually works, the things most investors never hear. His book, The $1 Million Decision, The Things Most Investors Never Hear, it's what he learned and why he believes typical investors lose more than $1 million over their careers simply by playing the rigged game of investing. So Robert's mission is to make investing simple, transparent, and effective for busy professionals and entrepreneurs. So wow. Welcome to The Necessary Entrepreneur, Robert.
Thank you for inviting me. It's an honor to be here.
Awesome. So you lost a ton of your net worth and wealth. I'm sure we could sit here and talk for hours in a cigar lounge, having our drinks. But what's the, 30 to second version on how that happened from listening to those gurus? What happened?
So I was an entrepreneur. After 5 years in business, my company started to produce quite a lot of profits. And at that time, I was totally financially illiterate. So I trusted financial advisors. I knew that I should invest, but I didn't know how. So I trusted them. And year after year, I gave them almost all of my business profits. And after years and years and years of doing that, me and my wife, Sarah, we had a conversation, and she said, Robert, I know that you trust these guys, but maybe just let's check, where we stand. And I ordered all these account statements, and when the envelopes arrived, it was like, what? Are there some zeros missing? So money that I was investing, money for which I was working day and night over weekends, it was mostly gone. And that was a real shocker for me. I became depressed. I lost my motivation to work. It was really a dark period. And the main reason, later I found out that the main reason was that my interests as an investor and their interests were not aligned. Later I realized that they only cared about commissions and fees, and they didn't care about gains that I will have as an investor. So yeah, their choice of products was poor. They also did a lot of short-term trading with my money. They lost a lot of money doing that, and so on. So it was a very painful experience, but also that experience led me to start researching what is happening behind the scenes of the financial industry. Because at that time I realized I need to get this house in order. I need to learn on my own what is happening in the investing world. So I will be able to invest on my own without the help of the financial industry, without the help of financial advisors. And this is also the basis of my current business. So now because I learned so much, now I'm in a position to teach others how to avoid making the same mistakes that I did in the beginning of my investing career.
Is it easy to lay out what's happening behind the scenes? If it took you 7 years to learn it and then write the book, The $1 Million Decision, can you easily transfer to us what's happening behind the scenes without all the nuance?
Yeah, there are very simple things that you need to understand if you want to get great returns as an investor. And the biggest revelation that I had was that small annual fees that they charge are a big problem over the long run. So these small fees, for example, 1% management fee or 2% management fee that they charge for their services, or if you are using, for example, mutual funds or many different types of investments, you are always incurring these management fees, and they sound small. They seem small, like 1% per year or 2% per year, but over a long period of time, they compound and they rob you of your financial future. And that was the biggest revelation, because 1 or 2% annual fee can mean 50 or 70% fee over the long run. And that is something that we cannot comprehend, because our brains are not meant to comprehend these things, because this is the effect of compounding over the long run. And that was the biggest thing that I learned. There were many other things, but that was the, let's say, major learning point for me.
Yeah, how can we? I mean, this is your business. We're going to touch on today, and at the end of 50 minutes, they might run out and buy your book. They might connect with you, and you might gain some new clients and customers. But I think what makes this so difficult is that we're working every day. We're so busy in our lives, right? We're working, we're spending time with family. We don't have enough time to maintain the great life that we all want to live with all the hours in the day. And so, how do we do this without finding enough time to become the expert in this field?
Yeah, that was the challenge also for me, because I was an entrepreneur, and I never wanted to learn this stuff, because I thought, okay, these experts, these financial advisors, they will help me. But of course, it turned the other way. So if I so now the core of my business is to simplify things for others, to make investing accessible, to make investing simple, because one of the quotes from my book says, investing is simple. It's the financial industry that works hard to make it complex. And that is why I'm always trying to simplify things. So for example, my wife, she has a very simple portfolio. She is simply investing in 2 ETFs. Let me just explain what ETFs are for maybe some listeners who don't know. So these are basically baskets of stocks. Okay, so you are investing in ETF. This means that you are investing in a big basket of stocks. For example, S&P 500. So you are investing in 500 biggest US companies. And this is a very simple strategy. So you are basically exposed to the stock market. The stock market has been in an uptrend since everything started, more than 100 years ago. And I don't see it stopping anytime soon. Why? First, because when you invest in companies, companies are building new value, are creating new value. They are innovating. They are producing new services, new products, and that is why their value is increasing. And also, the second reason is that our governments are in debts. And they are constantly printing new money in order to, let's say, solve this debt crisis or situation. And this will not stop anytime soon. And because there is more and more money in circulation, of course, it ends up in assets. And that is why real estate prices over the long run, they go up. Stock prices over the long run, they go up. Gold is going up. Everything is going up over the long run because there is more and more money in circulation. So my wife, for example, she is only investing in 2 ETFs. One simple global ETF. That is, this is the exposure to the biggest companies in the world. And the second ETF is technology ETF, because technology is the future, of course. And she is outperforming even Warren Buffett with this simple strategy. And she is investing in ETFs that have very low fees. So if you want to be exposed to the stock market, and if you want to do it with the lowest possible cost, then, of course, the ETFs are the way to go, because they charge very small annual fees. For example, compared to mutual funds, they have like 10 to 20 times lower fees. their fees, so ETF fees are almost nothing. So you keep, as an investor, you keep the lion's share or almost all the future returns. And of course, if you invest in mutual funds or any other product that has high management fees, like 1% per year or 2% per year, or if you are paying that to your financial advisor, then of course the financial industry will take the lion's share of your future returns. So this is the simple strategy that anyone can deploy, especially if you are a busy professional or an entrepreneur. You don't need to overthink it. You just invest in simple ETFs, and that's basically it. If you want to really simplify things.
Yeah. Is that as simple? Do most of us need it that simple?
It would be best if somebody who is busy in his business, if he or she does that, a simple strategy. Maybe you can add some precious metals to your portfolio. Maybe you can add later in life when you are, let's say, 60 plus, you can add some bonds. Maybe you can add some Bitcoin, because Bitcoin is digital gold, is a new store of value. It's for the future generations. So right now, Bitcoin is acting like a risk-on asset, like similar to stocks, but in the future it will be probably more similar to gold. But these are the key parts of the portfolio that someone should have, and the core of my portfolio is also stock index funds, stock ETFs. Sorry, ETFs are almost the same thing as index funds.
Do you pick those yourself? Do you pretty much put your own ETF together, or do you just invest in ones that are already created?
Yeah, they are already created. You cannot, as a individual, you cannot create your own ETFs. You need to go to buy Vanguard ETFs, or there are several issuers who are very, very big companies, and the most let's say Vanguard was the first company that started issuing ETFs, and you just stick with one of these big names, and that's it.
It diversifies automatically, right? Because what a lot of people are told is diversification, right? So it's automatically, if you take the top 500 stocks, because what a guy like a Ray Dalio says, a lot of people look up to him, right? I think he talks about these 11 distinct industries or companies that you should invest in that aren't interconnected at all. I think I'm correct about that.
Yeah, and if you are investing in a simple ETF that covers, let's say, S&P 500 stocks, that's more than enough diversification. You don't really need to diversify further, and it's simple and easy.
So if it's this simple, what else do we need Robert for?
Let me give you an example.
Yeah.
Last year, 2025, in March and April, the world was on fire. Why? Because Donald Trump announced all these tariffs, like Liberation Day and stuff like this. It was a total chaos in the markets, and people were panic selling. People thought that we are going into recession. Media was full of headlines: "Sell everything. This trader is selling everything. This Wall Street veteran is getting out of the market," and so on. So people were in panic mode, were panic selling. Now, that was the worst time to sell, okay? And me and my members were heavily buying at the time. I issued free buy signals at that moment, in this 1 month period when this was happening. I issued free buy signals, and I was telling my members, I'm buying. I showed them the screenshots of my purchases and so on. People, we are herd animals. And when we see everybody in panic and media telling us to get out of the market and so on, we will be, a lot of people will be panic selling at the worst possible moment. And what I give investors is this long-term perspective peace of mind, and the let's say I try to inverse the psychology of investing at the current moment, So when I see problems in the markets, at that time we are buying, and of course, in hindsight, that were the best buying opportunities. The same thing, for example, with Bitcoin. In 2021, Bitcoin went to 66,000. It was a big bull run for Bitcoin. Then in the next year, in 2022, it went down 77% to 16,000 per Bitcoin. Everybody was panicking. Everybody was selling Bitcoin. Jim Cramer on CNBC, this is a famous financial TV host, he had a show and he said, "Get out of Bitcoin while you can." And that was in November 2022. At that time, I said, exactly one day after that show, I said, this is an amazing buying opportunity. Jim Cramer saying, get out of Bitcoin, Bitcoin will go to zero. It's an amazing buying opportunity. And I issued a big buy signal. So I was buying at the time and I told my members, I'm buying now Bitcoin. This is a great contrarian indicator. Jim Cramer saying that. And
and we're sitting here, it's 5x. It's 5x 4 years later.
So after that, Bitcoin went to 120,000. And guess when we were selling? We were selling Bitcoin at 120,000, 106,000, and then at 96,000. And now we are out of Bitcoin because Bitcoin is in a bear trend. We were buying
down to 88. Last night I looked; it was at 88.
Yeah, and I think that there is a very high probability that Bitcoin will go much further down in the coming year, because looks like it's following the same 4-year cycle as it did in the previous 12 years or something.
Is it because the sellers take their profit off the table? Is that why? Because it gets to a point where you sell at 120 and 100 and there's not as many buyers to support the price. Is that why?
I think that one part of the reason is that Bitcoin is quite a new asset class. It's very young. So in the future, it will be digital gold. It will be risk-off asset, but not yet, not today. Today, it's acting like technology stock, and even worse than technology stocks. One reason is this, that it's very young and very volatile. It's like a teenager. One day it's, he's excited and at the top of the world, and the next day he's drunk and lying in bed. So this is the nature of Bitcoin. And the second reason, of course, is this 4-year cycle that was happening in the past because of this halving. Every 4 years, the issuance of new bitcoins or the mining of new bitcoins was basically halved. So every 4 years approximately, and it was harder to mine Bitcoin. That means that less and less Bitcoin came to the market, and maybe people got used to this cycle. And sometimes when everybody is following a certain cycle, it's a self-fulfilling prophecy. So I think it's a combination of these things, but I really don't care what is the reason, because looks like I said to my members when we were selling, if it walks like a duck, if it quacks like a duck, then it's a duck. And Bitcoin looks like, even though all the experts were saying Bitcoin is now in a super cycle. Bitcoin, forget about the 4-year cycle from the past, because now it's an institutional asset. Big banks are investing, countries are investing, and so on. But I said, if it, the chart is saying something, and I'm looking at the chart, and I don't care if institutions are investing. I'm just looking at the chart, and I see that the same pattern is repeating. So I'm getting out of Bitcoin, and that's it.
Yeah. It's wild. And looking at gold, I think it was at 4,600 or something. It's crazy.
Yeah,
wild.
gold did an amazing run, and it's very funny because all these boomers who are sitting on their portfolios that have a lot of gold and silver are now laughing at at crypto guys.
They are.
So yeah, it's
Yes.
funny. But yeah,
Why
also
do good?
yeah, also gold. It's an amazing asset class. Right now, it's doing a great bull run, but you need to be very careful. I personally am now gradually exiting gold. Why?
Mhm.
Because gold historically had these short periods of huge growth,
Mhm.
price growth, but then when it cools down, it can have zero or negative returns for the next 10 or 15 years.
Yep.
So I am very careful now. I had a lot of gold also as an investment in my portfolio, and I was buying in 2022, 2023. Then I stopped, and now I'm gradually selling gold because this bull run will stop, will end at one point in time. We don't know when, but and I don't see very good risk versus reward for gold now. I saw that a couple of years ago, but now, of course, it's a totally different story because you don't want to get into an asset class when it already had this kind of huge run.
So that's what isn't this key? What everybody's trying to time it. The less sophisticated
Yeah.
investor always trying to time the market. Does that lead into this idea that you believe and you've seen over time that investors they lose half their gains over time?
Yeah, if you are just trying constantly to get in and out of the market, you will not be successful as an investor. I'm a long-term investor. Sometimes I do an intervention in my portfolio, like I did for Bitcoin. But I was accumulating Bitcoin, let's say, 3 years ago, and now I exited it, after 3 years. But I didn't trade Bitcoin in between. I didn't go like every week in and then out and in and out and in and out. This is a fool's errand. You will never have great returns if you are trying to swing trade or day trade or something like this, because first, it's there is less than 1% of profitable short-term traders in the world, less than 1%, and it's only a game of for professionals and these high speed trading computers and systems and so on. So you cannot compete with that, and also you need to account for your time and psychology, because when you are trying to short-term trade the markets, you will spend a lot of time doing it. And when you are calculating your ROI, return on investment, you need to calculate also your time. You need to account for your time. And short-term traders are not doing that. They are sitting behind their trading desks all the time, like 12 hours per day. They are nervous all the time. Their health is deteriorating. It's not healthy being a short-term trader, and they don't account for all these costs. Time and their health and peace of mind when they are doing the ROI calculations. So even if you are profitable as a short-term trader, usually when you account for all these things, you are deeply in minus.
Yeah. So you touched on the high-speed trading. I'd like to dip our toes in here into these dark forces in Wall Street that most people don't know about. I'm assuming the high-speed trading is one of them. I don't know.
Yeah, so short-term trading is one of my 6 dark forces of investing. So the first one is the commission camouflage effect. So this is small fees, small annual fees seem harmless, but over time they eat away at a massive portion of your returns. So this was the first dark force, and I was already talking about this. And then one of them is also this short-term trading game that you cannot win. Then another dark force is the lure of the shiny next big thing. So investors are constantly tempted by hyped up trends or hot tips. For example, quantum computing. Like 6 months ago, everybody was talking about quantum computing, and then of course the collapse happened. And I think it's not over yet. The quantum computing, all these companies are pre-revenue. They have no revenue. They have losses. They have terrible balance sheets, and very few of them will survive in the next 5 to 10 years. And this technology is still 10 years away. Commercial application. So yeah, people want to buy the next big shiny thing, but usually they are too late. So these are just a few of these dark forces.
Yeah. Which one's the darkest? Which of the 6 dark forces? Which one's the darkest?
Yeah, I would say commissions. I would say commissions and fees, because you don't see them, or you don't understand them. So if we have a couple of minutes, I can give you a concrete example of these small fees and what they do to your portfolio. So if you are okay with that.
Yep.
Yeah. So for example, if you pay a 1% management fee to your financial advisor or fund, it may sound small, but it's not just this fee that you lose. You also lose all the growth that money could have made for you over time. And let's look at let's look at a simple example. Let's say that your portfolio is worth 100,000. Okay. Now 1% fee means that you pay 1,000 in the first year. And that 1,000 is not only gone, it's no longer growing for you. So for example, if the market grows about, let's say, 8% per year, that 1,000 could have turned into more than 10,000 over 30 years. And that's just from 1 year of fees. So if you account for all these fees over 30-year span, for example, the total cost is over 120,000 in lost growth. And that's more than your current portfolio value. So a 1% fee doesn't really cost you 1,000 a year. It can cost you your financial freedom or delay your retirement by 3 to 10 years. And that's the thing that most people don't realize. And that is why I think that these fees are the biggest dark forces. This is like Darth Vader of investing.
Where do you think, go back to when you were an entrepreneur, when you started your businesses, you probably weren't thinking about investing yet. You were thinking about making a profit on the current business. So at what moment should someone start thinking about investing? It's probably different based on the country that they're in, tax laws. Do they have 401ks and IRAs like we have? But when should they start thinking about investing?
Well, as soon as possible, but not too soon. So first, you need to think about increasing your income. Because if you invest very, very, let's say, small amounts of money each month or each quarter or each year, then it will take you like 178 years to reach some kind of financial freedom or big enough portfolio to give you peace of mind. So the first thing that you need to do in your career is to think about increasing your income, and this allows you to have, let's say, a lot of money to invest. Okay, so when you have a lot of money to invest, but this a lot, is of course different for each person. But let's say that you reach a point where you can invest, let's say, 20% of your annual income. That's a perfect way to start. So you should always live below your means, because otherwise you cannot invest anything. But first you need to increase your income. and then you can invest larger amounts of money, and this of course will give you more financial power, and your investments of course will then bring you more and more profit.
So you're making an argument if somebody makes 50,000 US dollars, if they should invest 8%, that's $4,000, right?
Yeah.
And so if you're like, wow, I don't have 4,000 in my budget, your argument would be then find somewhere to make an extra $4,000 and go to
Yeah, so
54,000.
maybe at first invest this 4,000 into learning new stuff, into improving your money making skills. Try to learn more about I don't know, marketing, selling, communicating, maybe public speaking, maybe negotiating, leadership. So you need to have these business skills, even if you are employed somewhere. You need these business skills to increase your income. Because let's say that you are a programmer somewhere, you are programming stuff, you are some kind of engineer or whatever. If you know a bit about marketing and selling, then you become much more valuable, because you can you are able to get your ideas across. People will understand what is your value that you are bringing to the table. You will be able to negotiate better for a higher salary. You will be able to present stuff to people, and this will increase your value for the company where you are working, and of course it will give you more power to negotiate your salary. So yeah, this let's say soft skills or business skills are super important in our lives. For example, when I started in my first business, I was still a student. I started my first business in a student dorm. And at that time, I had no clue about business, of course. But I was an avid reader. I was reading business books all the time. At that time, I was visiting the library all the time and reading these practical business books on how to sell, how to market your business, how to run your business, and similar books. And because I learned a lot of stuff from these books at that time, that there was this was before the year 2000, so there was not a lot of resources online, and I needed books, so I read a lot of books, and this was a very beneficial for my career, because I learned a lot of stuff, and I was able to quickly increase the income and profits of my company.
When do you think someone has enough money to really start making an impact? How much in an investment account do you really feel that when you have this amount, you really have something to play with?
I think that you need to get to above 1 million. Above 1 million should be the first goal. Now, of course, you will need. I also started with less, but over time, of course, I accumulated more and more money, and the game of investing becomes really enjoyable when your portfolio is above 1 million.
Is it
Because
because you can
then,
really
for
feel the
example.
growth? You can feel it.
Yeah, because for example, if the last 2 years were amazing for investors, because the market grew more than 20% per year, and so if you have a 1 million portfolio,
It's
and
1,500,000 now.
this is 1.5 million, in 2 years, and you can really feel the growth. Now, of course, don't get me wrong, it will not be 20% plus every single year, because this was these last couple of years were exceptional years. So you, as an investor, you also need to be prepared for down years. Sometimes you can have a year where your portfolio will be in minus, where we will have like minus 15%, minus 20%. This will happen. It also happened a lot of years, in the past. So as a long-term investor, you should develop this long-term philosophy. So I don't really care what will happen next year or the year after that. I only care that over the long run, for example, 10 plus years, I will have amazing returns. And This is the most important thing, So don't try to or don't think that every single year will be super profitable, because it won't be. Yeah, you need to be prepared for also down years.
So looking back on your journey, what's one decision? A lot of people ask us these questions. I think this is important for context, but what's one decision you made in this investing journey that turned out to be your $1 million decision? Because you wrote the book. So did you have $1 million decision?
Yeah. I will give you a combination of two decisions. The first decision was to only invest in low fee products or low cost products like ETFs. So previously, I was investing also. I was mostly investing in mutual funds and other stuff that had high fees. So the first decision was low fee products. The second decision was to stay away from short-term trading, because I lost an arm and a leg short-term trading, because these advisors and gurus were also short-term trading with my money, and I was still young at that time, and I was a bit too aggressive, and I also tried short-term trading on my own. So that was not a good idea. So this was the second decision: stop everything connected to short-term trading. And these two decisions in combination were my $1 million decisions.
So since you're both an entrepreneur and now an entrepreneur in the investing world, how should entrepreneurs, because it's just a ton of the world, but how should they think about aligning their business growth and long-term financial planning? Like, not just surviving year over year and paying the bills. How should they align that growth with their long-term planning?
Yeah, as an entrepreneur, you always need to think about the risks. So, for example, if something happens to your business, it's not good to have all the eggs in one basket. So a lot of entrepreneurs, they invest everything in their own business. And they think that nothing can happen. But we saw, a lot of businesses went down because of AI. A lot of businesses went out of business because there was some kind of competition coming that they didn't see, and so on. So as an entrepreneur, I try to, of course, you are investing in your own business. That's perfectly fine. But you should always keep in mind that it's a good idea to diversify a bit, and to also invest part of your profits into financial markets, for example, in the stock market, because this is how you have peace of mind. Because even if your business, even if something bad happens to your business, something that you cannot foresee, you will sleep better if you have some money, if you have an investment portfolio outside of your business. So that's one guideline that I always give to entrepreneurs. Of course, you will not start investing when your business is a startup, because you don't have money. But when it becomes profitable, when it becomes more mature, then of course it's time to diversify a bit.
What excites you? You have passion for this industry. Yes, you had gurus who invested your money wrong and you lost a lot of it, but 7 years later, through that journey and all this time in this, what still excites you about this business? Your smile, you're excited, you have all this passion. Where does that come from? Why are you still excited? Because now in this tech and AI world, this stuff is moving so fast. It's hard to keep up. So what excites you?
My clients, my members. This is something that I really like to do. I like to help them. I like to answer their questions. I like to give them support, and sometimes, when they send me thank you emails and stuff like this, it's really an amazing thing to read these things. Let me just give you one example. I have a member from Australia who he joined in 2018, and he started to invest around the year 2000, and then the financial crisis hit in 2008. And his portfolio went down sharply, of course, like 50%. And at that time, he was so scared that he sold everything. And then after the financial crisis was, let's say, solved, he started to read all these doomsday books from authors that are always scaring people about the next recession and the end of the world and so on. So he didn't get back into the markets since 2008 when he joined my course. And then he told me his story. He said, because I was reading all these negative books, all these doomsday books, I stopped investing. I took all the money and I put it into 4 different banks so that I will be really safe. So he had more than 1 million Australian dollars. So he put all that money into different banks and he was just sitting in cash. So he never invested. And then he said, in 2018, when he joined my course, he said, Robert, you changed my life because you always think positively about the world. You always think that the world tomorrow will be better than it is today. And I was doing it wrong, for the last 10 years. So he missed out on, let's say, 300% gain on his money because he was sitting in cash and because he was scared. So what I try to do with my listeners, with my members, is to give them the positive perspective about the future of the world. The world is full of entrepreneurs who are solving difficult problems, and there are a lot of innovators out there. There are a lot of new technologies out there, but because of all that, the world tomorrow will be better than it is today. Because if you take a look at history, we never in the history of humankind we had such a great living standard for the masses, for most of the people. We never had so few people who are in poverty, who are living in poverty. We have the best of the best world in the history of our planet, and I don't know why this should stop. If for hundreds and hundreds of years the world was getting better and better and better, I don't know why it should stop now. So I always have this positive outlook on the world, and I'm also always saying, this is like a famous adage for investing: pessimists sound smart, but optimists make money, and that's the truth.
So Robert Rolih is the optimist of investing.
Yeah,
it's good.
I am.
What you think you're going to be doing this for the rest of your life? Is this the journey you're on?
Yeah, I am 17 years old right now. So yeah, I think that I will be doing this for decades and decades. And I never plan to retire because I would be bored to death. Like retiring, I don't see myself as retired. So I hope that I will be healthy for as long as possible, and that I will be able to do this for a lot of and maybe the innovators will find some way to upload our consciousness into some kind of cloud, so we will be able to
live on
survive
forever,
even our death or something.
What so with AI happening, there's a lot of chatter. Everybody's talking about it. But what are the real applications, do you think, that are real practical about AI for investing?
AI for investing. I don't think that you need a lot of AI for investing, because if you are just following a simple ETF strategy, I don't know. I don't see AI giving you some additional, I don't know, valuable stuff. Yeah, it can help you maybe fine tune your portfolio, maybe to give you some risk warnings if you are doing something wrong or something like this, you know. But I don't know. It's just. Because like I said, investing is so simple that you really don't need financial industry and Wall Street helping you. You don't need a lot of AI tools helping you, because it's so simple.
So what about people borrowing against their assets? What about that? Whether they're borrowing against a real estate asset, whether it's against a stock, what about that?
Yeah, Ray Dalio used to say cash is trash. So yeah, it's sometimes it's not a bad idea to borrow against your assets, you know. So if you know what you are doing, of course. Of course, you should never borrow money in order to invest. If you are now out of money, you should never borrow money to invest, because this can be very dangerous. But if you already have real estate, if you already have different assets in your portfolio, then of course, if you know what you are doing, sure, you can do that, you know, but only if you know what you're doing.
Yeah, right. Is that maybe the error that it's what happened to you and what happens to so many people? We don't know what we're doing.
Yeah, we don't know. And when I was starting my investing career, the problem was that I didn't know that I don't know what I'm doing. So this is the issue. And it's like with commissions and fees that you are paying. Most people don't realize that they are paying these commissions, and they don't understand the effect of small commissions over the long run on your portfolio. Yeah, this is the cost of not knowing things. And that is why the first thing that you need to do as an investor is to learn a lot of stuff, so that you understand these things.
Is that what your platform's really doing? Is it setting out to help people learn, to grow, to understand, to become a better
Yeah,
investor?
yeah. So when I after I started to invest on my own, and I became very successful doing it, then I realized after several years of doing that, I realized that most entrepreneurs, most busy professionals, have the same problems that I had earlier in my career. And that was the reason why I started this company, why I became an investing educator, and why I created my investing course program, and why I'm doing all this stuff, why I wrote the book, and so on. Yeah.
So where's the best place for them to come find you? I'm sure the social media channels on LinkedIn, but what's the one best place
Yeah.
they can come and look at your course and find you and follow you?
The best first step would be to go to my website. It's a very simple URL. It's just my name and surname.com. So it's robertrolih.com, ROLIH.com. So robertrolih.com. And there you will see I am running a free online masterclass. It's a 90-minute masterclass for long-term investors, where I share my current outlook on the markets, where I share how to invest in the age of AI and excessive money printing, and how to invest, so how to use this reverse psychology in investing to get really good gains. So how to go against the herd sometimes and get great gains. So yeah, I really recommend this as a first step.
So go to your website, but two things I think I took away today is buy ETFs and also be a buyer when there's blood in the water. I think we know someone else that made that statement back in the day.
Yeah.
Yeah. I think that was old Warren Buffett.
Yeah.
I'm pretty sure that's who said that. When everybody else is scared, that's where the
I think that
opportunity is.
Yeah. And
Yeah.
he said something like, when also when the taxi drivers are recommending you some investments, it's time to get out.
And when there's blood in the streets, that's when you buy.
Yeah, that's right.
And and buy some ETFs. Robert Rolih, thank you. I think you're going to get some people to hit the website. I'm going to go check it out. I love when people learn some hard lessons and they want to go out and share it with the world and they build a business from that. So thank you for sharing this with us.
Thank you for inviting me. It was a pleasure.